Well, joining us now with their reaction to today's testimony are two members of the Financial Services Committee, Minnesota Republican Michele Bachmann and New Hampshire Democrat Paul Hodes. Michele, let me start with you, Congressman. What is the role, do you think, for the Fed going forward? Should they have supervisory authority over securities dealers and investment banks?
Well, I think it's important that Hank Paulson was here today and appeared before the committee. I was extremely grateful that he did so, and also the Federal Reserve Chair, Ben Bernanke, was there as well. This hearing, actually, the impetus came from New Jersey Congressman Scott Garrett, who felt it was important in light of the unprecedented move that the Federal Reserve took with having J.P. Morgan Chase purchase Bear Stearns. We felt that it was important that we get some clear answers, direct answers from them, and as to what exactly is going to happen, I guess we'll see from here.
Well, Congressman Hodes, do you think that the Fed should have responsibility for these banks?
What is clear is that we need to bring our regulatory structure up to date in the information age. We're dealing with a credit crunch and a mortgage crisis that has Americans across this country reeling, and folks are dealing with new kinds of instruments in the securities field that require a new regulatory scheme. Whether it's the Federal Reserve or somebody else, we need to see greater cooperation, greater communication, and greater protection for American investors.
Congresswoman Bachmann, what did you think of the comments that seemed like both gentlemen, Bernanke and Paulson, are sensitive to the fact that if there is too much regulation, business can leave the U.S. and go elsewhere, for example, to Dubai, to London?
Well, I think that's absolutely true. We've seen that already occurring, where we've seen businesses exiting the United States, partially as a result of the high corporate tax structure, also because of Sarbanes-Oxley. But if businesses even sense that we'll be tightening up the regulatory piece of this pie, I think we very well could see them leave. That's not what we want to see happen. This was an unprecedented move. We don't want to send a signal to other non-banks in the future, financial firms, that they can just look to the American taxpayer to bail them out if they have a problem. We don't want to see that happen. But on the other hand, we don't want the pendulum to swing so far that we actually hurt business investment in the United States and force them to flee overseas for a better business climate.
You're both on the committee that oversees Fannie Mae and Freddie Mac. Let me start with you, Congressman Hodes. Hank Paulson says they're adequately capitalized. Ben Bernanke says they're adequately capitalized. Former St. Louis Fed Bank president Mr. Poole says that they are technically insolvent. What do you think?
Well, I think one thing is absolutely clear. Given the unprecedented challenges that we're facing in today's economy and the difficulties that Fannie Mae and Freddie Mac have had, it's vitally important that the Senate move the housing bill we've had, that we continue to monitor the situation with those two agencies closely. They need to be capitalized well. They need adequate liquidity to deal with the new challenges that we're going to face. But unfortunately, over the past 8 years, we've had a free-for-all Wild West environment. So we're going to have to balance.
I would greatly differ with that. I would greatly differ.
You got 15 seconds. Congresswoman, you have 15 seconds. We're almost out of time.
Hasn't happened.
We're going to have to balance adequate regulation.
All right.
And new regulation.
What we need to do is make sure that we have a strong business climate, and that's the concern in the future, that taxes are going to escalate. We don't want that to happen.
We'll bring you back and have a debate. You guys can fight. We'll hold your coats. Representatives Paul Hodes and Michele Bachmann, thank you very much. We want to mention that